Welcome to Decoding Market Rhythms, an introduction to Elliott Wave Theory. Financial markets may seem chaotic, but beneath the surface lies a hidden rhythm, patterns shaped by human psychology. In this presentation, we'll explore how crowd behavior creates predictable price movements and how Elliott Wave Theory helps traders and investors make sense of the chaos. Let's begin our journey into the waves of the market. The genesis of wave patterns. Let's go back to the 1930s. Ralph Nelson Elliott, a keen market observer, began studying decades of stock market data. His research led to a groundbreaking realization. Market prices don't move randomly, they follow recurring wave-like cycles. What drives these waves? It's not just news or economics, but collective human behavior, crowd psychology in action. Elliott's insight revealed that fear, greed, and optimism shape the flow of markets in a measurable way. Elliott's landmark publication. In 1938, Ralph Nelson Elliott made his theory official. He published The Wave Principle, a book that outlined how market patterns repeat based on human emotion and behavior. This wasn't just speculation. Elliott based his work on decades of real market data from the Dow Jones Industrial Average. His findings didn't just make waves, they changed the course of technical analysis forever. Impulse waves, the driving force. Impulse waves are the engine of market trends. In Elliott Wave Theory, they represent strong, directional movement made up of 5 smaller waves. Wave 1 starts the trend with an initial price rise. Wave 2 pulls back temporarily but doesn't erase the trend. Wave 3 is the most powerful, a strong surge, often driven by volume and momentum. Wave 4 offers a shallow pause, a breather before the last push. And Wave 5 completes the trend, often attracting late traders before reversal sets in. These 5 waves reveal the natural rhythm of crowd psychology in action. Corrective waves are the market's way of taking a breather. They move against the prevailing trend and usually consist of 3 waves, A, B, and C. There are 3 common patterns to watch. Zigzag, a sharp, directional correction. It's strong, fast, and common in trending markets. Flat, a sideways pattern. It consolidates price and tends to be less volatile. Triangle, a converging 5-wave structure that signals indecision and precedes a final breakout. These corrective patterns may look different, but they all serve one purpose: to reset the market before the next major move. The fractal nature of waves. One of the most powerful aspects of Elliott Wave Theory is its fractal nature. Wave patterns don't just happen once, they repeat at every scale. Whether you're looking at a 5-minute chart or a century of price history, you'll see similar wave structures unfolding again and again. These are classified into different degrees. Grand supercycle spans centuries. Supercycle lasts decades. Cycle plays out over years. Primary unfolds over months, and intermediate covers weeks to months. This self-similarity makes Elliott waves a versatile tool, whether you're a short-term trader or a long-term investor. Fibonacci ratios and Elliott waves. Fibonacci ratios play a crucial role in Elliott wave analysis. These mathematical relationships help identify where waves are likely to start, pause, or reverse. Retracements like 38.2%, 50%, and 61.8% are often used to forecast how far a correction might go. Extensions such as 123.6%, 161.8%, and even 261.8% project potential targets for the next impulse wave. By combining Fibonacci levels with wave structure, traders gain a powerful predictive tool to map price behavior with greater accuracy. It's not magic, it's math meeting market psychology. Let's review what we've learned about Elliott Wave Theory. First, market behavior is not random, it follows recognizable patterns. Second, waves repeat on every scale, thanks to the fractal nature of markets. Third, Fibonacci ratios help define wavelengths and turning points. And finally, practice is essential. Mastering Elliott waves takes time, repetition, and real-world application.